So very good evening, everyone. In the last class, we have completed a full length analysis on the definition of what is a capital asset. We understood the concept of what are the types of capital assets, bifurcation into two categories, short term and long term. Section 2 class of 42A, Section 2 class of 42B will be discussing about the concept of short term capital asset and short term capital gain. Already we discussed that. Next, long term capital asset is defined under Section 2 class 29AA and long term capital gain is defined under Section 2 class 29B. And there we also understood the reasoning behind why lawmaker defined short-term capital asset and short-term capital gain rather than first explaining long-term capital asset, which comes as first in the definitions. Logic I told you already. Next, after that we understood what could be the holding period to call something as a short-term or long-term. And we have considered only situations with effect from 23/7/2024. Comparison we have done in another side of the page. Means we divided that into two categories with effect from 27 with effect from 23/7 and even before 23/7 we covered. And 24 months is a cutoff period now to the maximum extent. Okay. Next after that, special case of house property. Special case of holding period. So special case of holding period, we have already seen in these cases how many months it will be taken. Next, we went into the tabular presentation, a broader analysis of what is a capital asset holding period in general. Okay. How to count this holding period? We will discuss in section number 2 class of 42. There are so many explanations are there. There we will be discussing about them. A question also we have done. Definition of short-term capital gain, all these things completed. Next we entered into the significant area in this particular chapter called as transfer concept. Listen, before I start with the transfer concept itself will take somewhere around 10 hours. Why? Reason I will tell you. Transfer concept will not take 10 hours, but a transfer concept will lead to linkage of so many other sections. Say for example, 47 class 1. You cannot read like that. Means transfer in relation to a capital asset include sale, exchange or relinquishment of an asset. Correct. This is said in 47. But if you see the bare act of 47, same. Whatever I kept there will be there. This is 2 class 47. What is 2 class 47? Definition of a transfer. Definition of a transfer. But in this definition, certain things will not come. Certain things will not come into this definition. What will not come into this definition? That is discussed in section 47. Section 47. That's why observe the screen properly. In the definition of transfer, section 2 class 47. Don't get confused. It is section 2 class 47 or the section 47. Okay. So we will first discuss about this. We will complete. Part B. When transfer will become effective. This will be understood from the judicial case laws. Complete. After that, we need to know section 48, schedule of computation. Schedule of computation. Once after the point C completed, then point D will start. What is point D? Transactions not regarded as transfer. Section 47. Okay. See, again I am repeating. Transfer concept. Number 3. In this 3, there are so many concepts, sub-concepts are there. First, definition of a transfer. Next, transfer when it will become effective. Next, computation schedule for capital gains. Next, transactions that are not regarded as transfers. This transaction not regarded as transfer will take around 10 hours time. Why? Linking will be there. What linking? I will explain today. So in this lecture, we will complete up to transactions not regarded as transfer introduction. Means this is 6 pages discussion we are going to make in this particular video. Okay. Starting from this page. 1, 2, 3, 4, 5, 6, 7. These 7 pages discussion we are going to make in this particular class. I will make each and every class not more than 1.5 hours because capital gains chapter, you should first feel that ease of learning. Means what? Same thing I can also make in one single video. I can merge both and make a 3 hours video. But psychologically, the student tendency will be in such a way, if the lecture length is somewhat short, unless and until it is some marathon before exams, if the length of the lecture is very small, psychologically he feels satisfied. Let us complete this in 1.5 hours. So that's why I'm breaking all the concepts into small and easier understanding in parts such that you will feel comfortable in the process of learning. Okay, let's begin. What is the name of the concept? Name of the concept is transfer concept. What is this? A definition of transfer covered in section 2 class 47. Okay, why we need to read? Charging section 45 class subsection 1 says that there will be a charge of capital gains tax if there is a transfer of a capital asset. See, I'm going to the intro. Where it is presented? See, first line it is there. See here. Any profits or gains arising from transfer of a capital asset. What we completed in the previous classes? We completed the significance of what is a capital asset. What is a capital asset? Now we are going to discuss about the concept of what is a transfer. What is a transfer? Okay. Listen. Sir, when you are learning capital gains, learn with complete patience and understanding, because I will tell you the reason. Concepts you are learning here will have impact throughout Income Tax Act. Wherever any kind of capital asset transfer is there, immediately this chapter will get invoked. We will be reading about the concept of business trusted CA final in our classes now, ongoing classes. When we come to special entity taxation, business trust, FII taxation, investment fund, alternate investment funds, okay, securitization trust, wherever we find any concept, their capital gains will be involved. Because in all those cases, units will be involved. Units of mutual fund, units of REIT, units of business trust, units of alternate investment fund, units of a securitization trust, or security receipts of a securitization trust. Like that, so many concepts will come. At that time, you will be really crying if you do not listen to capital gains chapter properly. Again, I am reminding all the students, okay, whether inter or final, one thing is clear. Capital gains, if you are having clarity, you are done with 30% of your income tax. I really mean that. 30% of your income tax you will be thorough. You will be done when if you are thorough with the chapter capital gains. So be expert when you are in learning process. Slowly let us read. Let it take 30 hours, no problem for me. But learn it in a proper way. The interlinkage that we are going to do is having a tremendous advantage when you go to exam hall. When interlinking the 2-3 sections are tested in exam, you learning from Koushik Mukhesh will be always at a premium when you read a Bayer Act in a proper way, by interconnecting one clause with another clause and harmoniously interpreting both. Okay, let's start our journey in understanding transfer concept under capital gains. Start. A definition of a transfer. Section 2 class 47. What is the definition? Let's start. transfer in relation to capital asset includes. So first itself very clear. These are these list 1, 2, 3, 4, 4A, 5, 6, and totally 7 items are there. These 7 items are not the only way of transfer. These are also the significant ways of transfer, noticeable way of transfer. Okay, so try to understand clearly. Whenever lawmaker uses the word includes in the definition, whenever lawmaker uses the word includes in the definition, there are two implications for that. How many? Two implications. Whenever the word includes comes in the section, one thing you already know, includes always represents an inclusive definition. Not only these are included, so many things are included. Listen, I will give you an example which I always tell at inter-level, final level, wherever law is touched. Any law, at income tax, any law. Whenever law uses the word means, it represents only. Whenever law uses the word includes, it represents also. Means what? How to understand? Transfer in relation to capital asset also include these. What do you mean by also includes these? There are so many things, also these will come. This is the way in which we need to understand. Okay, other one clarity. Next, that is one way. Second, whenever lawmaker wanted to create a strict interpretation, whenever lawmaker wanted to give a strict interpretation, lawmaker wanted to give a strict interpretation, then he will go for means. Means what is the lawmaker intention? Only these should come strictly. Don't add anything, don't delete anything. Strict interpretation. Then lawmaker will go for definition on a means basis. Okay. When lawmaker wanted to go liberally, or he wanted to create fiction, then the term includes will come. Oh, sorry. When he wanted to create a fiction, then the term includes will come. Sir, please explain this second one. So first thing is clear. Whenever the term means come na, only that should be included. Don't add anything, don't delete anything. Read it in a stricter sense. Interpretation should be a strict liberal interpretation. Sorry, strict literal interpretation. Second, includes. Whenever the word includes come into the picture, it also includes those items mentioned there. It is not that only those are included, also those are included. It's a liberal way of interpretation, not strict. Liberally you read, add also if required. And whenever lawmaker wanted to create a legal fiction, fiction means something which is not there, but I wanted you to assume that to be there, then the term includes will come into the picture. The term includes come into the picture. Those who have completed my 45 hours of income tax basics at final level or at inter level, wherever, basics I will put na. Basics means not just storytelling there. In that also we are completing most of the sections. Agricultural income we completed there, 173, 170, 172, 174, 174A, 175, 176, all the sections already, along with section number 44B, already completed there na, introduction. At that time, if you remember, we read about in our introduction lectures to income tax, there I said you one point. What is that? Definition of income. Definition of what? Income. Income means what generally? Income means something which is recurring in nature is an income. Is a income. Just in the last session we discussed one point. Non-compete fee. Non-compete fee is recurring or non-recurring? Actually non-recurring. But lawmaker wanted to bring it into the definition of income. That's why income includes. Income includes whenever something which is not actually that, but lawmaker wanted to bring it within the ambit of the provisions, he uses the word includes. Means what? In our definition of transfer also same situation will arise. So many things you see here are not even transfer, but still lawmaker wanted to treat it as a transfer. Okay, therefore fiction, whenever lawmaker wanted to create a fiction, means really it is not a transfer, but I wanted to treat it as a transfer, then this will get attracted. Understood the point? Let us go deep into this, dive deep into this trench and try to understand the concepts clearly. Lightly again, you should not get a doubt on transfer definition. For your understanding, I am telling you comparison say. Anyway, after 6 months, I am going to make all those videos as well. I am going to make comparison videos between the old act and the new act. 80-85% of the old and new both are same. Transfer definition for the new income tax act ditto. Copy paste means what? Almost capital gains chapter will be same like before. Okay, so learn properly in a right way. Start. Transfer in relation to a capital asset. First a golden words. Transfer in relation to a capital asset means what? We are not discussing about transfer in general sense. We are discussing in the context of capital assets. In the context of, in the last class already I told you, assessing officer is asking a document, company wanted to transfer the document. At that time, the term transfer will not fall within the ambit of 2 class 47 because that is not in relation to a capital asset, that is in relation to a document. Clear? So transfer in relation to a capital asset includes, means also have these into it. Number one, very popular, sale. Next one, exchange. Next one, relinquishment of the asset. Okay, obviously whenever I use the word asset, asset represents a capital asset. From now, whenever the word asset is used in this definition, I repeat, in this definition, that asset is a capital asset because in the beginning itself they said in relation to capital asset only you should read this. Okay, so the asset here includes only a capital asset. Okay, let us understand. Transfer in relation to capital assets include, first one if you observe, sale. First one you observe, sale. Sale, number one. 2, exchange. 3, relinquishment. Okay, let us see. Definition is inclusive in nature. Definition is applicable only if such transfer is in relation to capital asset. Section 2 class 47 reads as under transfer in relation to capital asset. Transfer in relation to capital asset. Next, first one. Sale is a transfer. Sale is a transfer. Let us understand what is a sale. Let us understand what is a sale. See there. In a sale, there are 2 parties satisfying 4 conditions. Party 1, seller. Party 2, buyer. Between buyer and seller, as per Sale of Goods Act and as per the Transfer of Properties Act, a sale contract should have 4 characters. There must be an agreement. Both the parties must be competent parties, not a minor, not a person of unsound mind, etc. There must be a valuable consideration and ownership should be transferred. If all the 4 conditions are satisfied, I call it as a sale transaction. I call it as sale transaction. Problem I will tell you. See, if 2 people are doing a transaction of delivering asset from one person to another person, okay, intentionally they will transfer everything. Ownership they do not transfer. What they do not transfer? Ownership they do not transfer. Okay, now sale is not there, but transfer is there. What is not there? Sale is not there. I will explain one more time. Listen carefully. A will sell shares to B. A will sell shares to B. Okay. Now what they will do? What they will do is A will sell the shares to B. B will pay consideration to A. But they will not send it to company for registration to transfer the ownership intentionally. Why? if the lawmaker in capital gains section, if you use the word sale as a transfer or only sale, transfer word are not there in income tax act, sale is there, then what they will tell, sale should satisfy 4 conditions: agreement, competent party, consideration, transfer of ownership. In this, ownership is not transferred, therefore there is no sale, therefore I will not pay tax on capital gains, he will tell. That's why lawmaker do not loosely use the word sale, he used the word transfer. Okay, whenever you try to escape from the clutches of sale, you will fall within the clutches of transfer. So anyway, let us understand. Sale is a transfer, but in a sale, 4 conditions, 2 parties must be there. Party 1, seller; party 2, buyer. What are the 4 conditions? There must be agreement between the buyer and seller. Both the parties must be competent parties. There must be a consideration, and there must be a ownership transfer. Sir, ownership transfer is not there, sir. Then what it will be? Then it is not a sale, but it will come into the ambit of transfer, because transfer includes sale. Transfer is not sale. Transfer means sale illa. Transfer includes it. This is also included. If any of the conditions you intentionally try to deviate and tell that this is not a sale, yes, that is not a sale, but that comes into the ambit of transfer. Second, exchange is a transfer. Word to word analysis. One word we completed, sale. Second word, exchange. See here. There is one person. There is another person. This person is transferring a property. This person in return again transferring another property. Monetary consideration is not there. Non-monetary consideration is there. What is transferring? Property is getting transferring. For example, conversion of preference shares into equity shares. Okay. Preference shareholder will give to the company preference shares. Company will give to the preference shareholder equity shares. Now 2 persons are involved. 2 different properties are involved when conversion happened. This particular thing falls under the ambit of exchange. Exchange is a transfer. Next. Relinquishment is a transfer. What is a transfer? Relinquishment is a transfer. So first, what do you mean by relinquish? Relinquish means withdraw. Relinquish means withdraw, abandon, cease to hold. See, this pen is my property. Example. Okay. See here, see there. This pen belongs to me. I said, I don't want. Now I relinquished it. Okay. I abandoned. I ceased to hold it. I withdrawn my particular asset. Withdrawn myself from that particular asset. These all will come under relinquish category. So, relinquishment is nothing but withdrawing, abandoning, cease to hold. Okay. Relinquishment should be in relation to an asset. Listen carefully from the Bare Act. Okay. Let's read the Bare Act properly. See here. Sale of the asset, exchange of the asset, relinquishment of the asset. From this, what are the 3 common things? What are the 3 things? Sale, exchange, relinquishment of what? Of the asset. Of the asset. So from this, what you have to understand? Asset should be relinquished. Extinguishment will be not in relation to the asset, it is in relation to any rights on the asset. Any rights on the asset. Extinguishment is in relation to the rights. Sale, exchange, relinquishment is in relation to the asset itself. Okay, it's not relinquishment of rights, it is a relinquishment of asset. Extinguishment of rights. Minute differences. Let us understand. So, relinquishment is withdrawing, abandoning, or ceasing to hold. Relinquishment should be in relation to the asset. Relinquishment should be in relation to asset. Next, in case of relinquishment, the asset will be given up by the person and continues to be held by some other person. Relinquishment, I will lose the asset, but some other person will take that asset. There, relinquishment will come. What will come? Relinquishment will come. Next. So, relinquishment means withdrawing, abandoning from that asset, ceasing to hold that asset. Relinquishment should be in relation to the asset. We should be in relation to the asset. In case of relinquishment, asset will be given up by a person and will be taken by some other person. So this is held in CIT versus Rasiklal Maniklal case law, Supreme Court. Next one, sale, exchange, relinquishment of the asset. One line completed. Second line, extinguishment is also a transfer. But what extinguishment? Extinguishment generally means a total destruction, termination or extinction of a capital asset. Okay, extinguishment should be in relation to the rights and not the asset itself. Classic example of extinguishment is reduction of share capital. Whenever reduction of share capital happens, okay, what will happen? Balance sheet la liability side equity shares. 1 lakh equity shares of rupees 100 each. 1 lakh equity shares of rupees 100 each. Okay, 1 crore rupee, 100 lakhs. 1 lakh equity shares of 100 each, 100 lakhs, 1 crore. Means how to understand this transaction now? How to understand the transaction means 1 lakh shares of rupees 100 each, 100 lakhs, also 1 crore. Now company went for reduction of share capital. Okay, they said 100 rupee share, 50 rupees we will reduce. Okay, only 50 will be there. Previously you used to get 1 share 1 vote when it is 100 rupee. Now it became 50. Then 1 share will not get 1 vote. 2 shares only will give 1 vote because 100 rupees ki 1 vote, 50 rupees ki 1 vote means that's not fair. That's unfair. So therefore what Companies Act will tell, whenever reduction happens, your voting rights will reduce. Your voting rights will reduce. So whenever there is a reduction of share capital, there will be a reduction in voting right. There is a reduction in dividend rights. Therefore, whenever there is a reduction of share capital, there will be a transfer. Reduction of share capital, a classic example is extinguishment, destruction of rights, either partially or wholly. In our example, I have taken a partial part. So, extinguishment is in relation to the rights, not in relation to the asset. Okay. Next. Redemption of preference shares. Redemption of preference shares. Now question, sir, preference shares are issued at 100. Issued at 100. Redeemed at 120. Redeemed at 120. 20 rupee capital gain, sir? Yes. Redemption is nothing but sale. Sale, exchange, relinquishment of the asset plus sale. So redemption of preference share is a sale treated as a transfer. Examples I am writing. Reduction of share capital is extinguishing rights, therefore is a transfer. Where it is decided? Kartikeya Sarabhai versus CIT. In this case law, it is decided that reduction of share capital is nothing but extinguishing his voting rights and dividend rights. It is a transfer. If you receive anything at the time of reduction, it will be regarded as a transfer. Sir, how it will affect everything, we will see separately while reading reduction of share capital concept in this particular chapter, read along with section 2 class 22C, deemed dividend. I will discuss in this chapter only. Next, distribution of capital assets upon firm dissolution. Distribution of capital assets upon firm dissolution. Okay. Sir, what is this concept, sir? I did not understand. Sir, listen carefully. I will explain you summary. Discussion will be going on in 45 subsection number 4. This will take around 2 hours time for us to complete. Which one? 45 subsection 4. When we come there, we are not into 45.4 now. I will explain the summary, the corollary of the whole idea. See, there is a firm. Firm went into dissolution. When firm goes into dissolution, assets of the firm will be sold, liabilities will be discharged, net assets balance will be distributed to the partners. But here comes the problem. See, whenever there is a transfer, we require 2 persons. One person will transfer to another person. Problem is, when a firm undergoes a dissolution process, firm and partners are not 2 people because the firm is not a separate legal entity. Firm and partners are one and the same. Therefore, the problem started. Since a firm is not a separate legal entity, it is same like that of the partners. Who is giving to whom is a question. Actually, there is no transfer, but lawmaker wanted to bring that into the ambit of the provisions of Income Tax Act into the transfer definition through the word extinguishment. Understood? That's why there is a deeming section called as section 45 subsection number 4. There we will read something which is not a transfer but deemed as a transfer. Understood? More discussion, even though you do not understand what I said now, we will discuss in 45.4 in detail. 2 hours. Remember my words. 2 hours minimum we will take to do this understanding, and we will also do 6-7 questions on that. Practical scenario questions. Then you will really understand what happens at the time of dissolution of a firm when distribution of assets is made to the partners. Next. Partner brings his capital asset into the business. Okay, his asset he brought into business at a particular value. They will record in the books of the firm or not. The balance when you purchase, the one cost will be there. When you transfer to the firm, firm records one value. The difference will be treated as a capital gain. Yes, there also transfer will be there. 45.3. How deemed transfer again we will see in section 45 subsection number 3. Okay, just notes I have given you. So to sum up everything, sale is a transfer. Exchange of asset is a transfer. Relinquishment of asset is a transfer. Extinguishment of rights on the asset. Okay, rights therein. In what? In asset. Any rights are extinguished, then we will call it a transfer. Extinguishment of the asset itself, it is not a transfer again. Okay, extinguishment of asset. For example, asset lost in fire. Now, it is not relinquishment of asset. You did not abandon. Fire extinguished that asset. That is not regarded as a transfer, because extinguishment of rights on the asset, if it is there, then only section will get attracted. This is the significance of any rights. Extinguishment of asset illa, extinguishment of rights. Asset extinguished, chapter will not get attracted. In that also there is one section, 45 subsection number 1A. Okay, typhoons, riots, okay, any kind of earthquake, etc., natural calamities time. At that time, there is a chance that we discuss separately in section 45 1A. So many things are there to discuss here. Enjoy the concepts, that's all. Okay, so sale is a transfer. Sale of asset is a transfer. Exchange of asset is a transfer. Relinquishment of asset is a transfer. Extinguishment of asset is not a transfer. Extinguishment of rights on the asset is a transfer. Okay, next. Compulsory acquisition thereof under any law. There is a separate section for this, 45. We will read there. Compulsory acquisition. Government acquired my property on a compulsory acquisition. That is also regarded as a transfer. Sir, they acquired, sir, I did not give. I have no option. Sir, whenever we see the word sale, there is an agreement. Two people should say okay. What is that? Buyer, seller should say okay. Consent should be there. Compulsory acquisition, consent is not there. I am telling I am going to acquire your property, that's all. Then where is my consent? Even though consent is not there, sale may not be there, but transfer will be there. That's why compulsory acquisition thereof under any law. Transfer on compulsory acquisition. Okay, that's why I clearly written now will be discussed in detail in section 45. Just remember the whole idea of transfer definition now. Next, in case where asset is converted by the owner thereof into, or is treated by him as stock in trade of the business carried on by him, such conversion or treatment. Listen. This also will come in section 45 again. Again, 45 section, this will also come. But there we will discuss in depth conversion. There we will see 3 different situations. Conversion of capital asset into stock in trade. Conversion of stock in trade into capital asset. Conversion of immovable property being a capital asset into stock in trade, section 43 CA, PGBP chapter. That also we will bring here. Make a collective comparison and understand 43 CA, section 50C. 43 CA, section 50C. Both we will put together and read, such that you will have a super duper clarity. Okay, but listen carefully. In case where asset is converted by the owner into stock in trade. Which asset? In relation to capital asset. So capital asset converted into stock in trade. Capital asset converted into stock in trade. So whenever capital asset is converted into stock in trade, whenever capital asset is converted into stock in trade, that conversion, okay, such conversion means which conversion? Conversion of capital asset into stock in trade happened, na? That conversion process is treated as a transfer. Why, sir? Reason we will discuss when we come to conversion of capital asset into stock in trade. Now, don't ask any questions. First, we are going to just understand what are all included. Next, when we come to specific areas, see, we will specifically come into extinguishment. There we will understand much more about extinguishment. Next, we will come to compulsory acquisition in 45. Then full explanation of compulsory acquisition. Conversion of capital asset into stock in trade. Full explanation in 45 section will come. Understood? Done. So, conversion of capital asset into stock in trade. Such conversion will be treated as a transfer. Such conversion will be, because, listen carefully, mine is a capital asset coming in balance sheet asset side. Treated it as stock in trade. Suddenly the shape is changing. A thing which should come in P&L, balance sheet, now comes to P&L as a stock in trade. Sale will become a normal sale on P&L, trading P&L account, not capital asset sale. In reality, I am just converting the nature. Till today, it is a capital asset. Now it will be treated as a business asset. I mean, stock in trade. Okay. Actually, I did not give to anyone. Person 1 is not giving to person 2 to call it a transfer. Deemed transfer. Again, another concept is conversion of capital asset into stock in trade. Discussion will happen in section number 45. Next. Maturity of zero coupon bond. Maturity of zero coupon bond. I will explain. See. So conversion of stock capital asset into stock in trade will be discussed in detail in section 45. Wherever reference is there, I will only tell like this. Okay. When we come to 45, we will discuss. Next. Maturity of a ZCB is a transfer under section 2 class 47 class number 4A. Okay. Let us understand how a zero coupon bond behave. Zero coupon bonds today, T0 means today, T10 means 10 years after. Zero coupon bonds are issued at a discounted price. Say, I will issue at 20 rupees. Zero coupon in the intermittent 10 years, no interest will be paid. Oh, then what you will do? Finally, at the end of 10th year, they will redeem at par. Say how much? 300 rupees. Difference of 280 will be treated as a capital gain. Means you purchased at 20, redeemed at 300, the balance 280 will be treated as a capital gain, because in reality, there is only redemption. Issue and redemption happened. There is not actual sale happened between two persons. Understood or not? You purchased at 20 rupee. Okay, you sold at 300 rupees to the company. 300 rupees to the company. Now, in this case, if you understand clearly, issued at a discount, redeemed at a par, I will call the transaction of maturity or redemption of a zero coupon bond as a transfer. Since it is a bond is a capital asset, and since there is a transfer, both of them get attracted on this 280 capital gains will get attracted. In the middle term, no interest will be paid. Next one. So we completed till 4. So 1, sale, exchange, relinquishment of asset, extinguishment of rights, compulsory acquisition, conversion of capital asset into stock in trade, maturity of a zero coupon bond. Next one. 5th one. Let us read. Any transaction involving the allowing of the possession of any immovable property to be taken or retained in part performance of a contract of the nature referred to in section 53A of Transfer of Properties Act. Read the statement properly first. Read the point? Yeah. Let us go into analysis. Read the point, everyone? Okay. So now we are going to discuss about point number 5. See, any transaction involving the allowing of possession of any immovable property. So you are allowing possession of immovable property. Possession means having physical presence is a possession, taking into your control. Okay. Ownership transfer he is not discussing. He is telling only possession is transferred. Will it be regarded as a transfer? Ownership not transferred now on the immovable property. Listen, I will give you an example for you to visualize this. See, section number 53 of Transfer of Properties Act, when I read that particular concept, I summed up 4 important points for you to understand. When 53A will get attracted, there is an agreement in writing. Very, very important writing. There is an agreement in writing. Between whom? Between buyer and the seller. So, there are 2 parties to attract 53 of Transfer of Properties Act. One buyer and seller. So, buyer and seller entered into an agreement. Agreement in writing. Second, as per that agreement, seller is giving possession of the property to buyer. Means whole and sole control, ownership, whole and sole control, possession, keys of that particular building, everything was given by seller to buyer. Seller to buyer. Now what is the magic happening here? Intentionally they don't do registration. Intentionally they don't do registration. I will give you an example. See here. Look at the screen. Okay, see here. Mr. A, Mr. B. A is the owner of house property. Okay, A is the owner of house property. B is a buyer. B is a buyer. A is a owner cum seller. A will sell the property to B. B will pay consideration for that. Transaction completed. Ownership will be given or not given? When ownership will get transferred? When registration is done, ownership will be then transferred. Intentionally, if the ownership is transferred, then only the sale will get completed normally. Correct? But what will happen if they register, sale will get registered, ownership will change. Upon change in ownership, transaction will become complete and Mr. B will be treated as a buyer and Mr. A will be treated as a seller. In the hands of A, capital gains will get attracted because he purchased this property at 1 crore, sold to him at 1.5 crore. Forget about Mr. B. See the situation of A. What A has to do? Now A will tell like this. Arey B, you are buying? Yes, sir, buying. How much? 1.5 crore? Yes, 1.5 crore. I purchased at 1. I am giving it to you at 1.5 crore. Are you ready to take? B said, yes, sir, I am ready to take. Take it. Take the documents. Everything I will transfer. But I will not register this. If I register, sale will be coming official. My name will be removed. Your name will be written. Immediately government will tell, oh, sale happened between A and B. Therefore, A pay capital gain on 50 lakhs. Like that government will ask us 50 lakh into 12.5%. Tax will be levied. Therefore, what A will tell to B intentionally, B, I will give you keys. I will give you everything, possession, control on the building, everything I will give. I will not do registration. If I don't do registration, sale will not get registered. Sale will not get registered. Ownership will not transfer. Ownership will not transfer. Government can't know what is happening between you and me. So therefore, applicants will not get attracted. That's why lawmaker said that even because of part performance means what? Consideration is paid. One part is performed. Balance part is what? Registration. This is not yet done. Only part is performed. Balance registration part is pending. But the Transfer of Properties Act section 53A says that if four conditions are satisfied, there is a agreement between buyer and seller. There is an agreement between a buyer and seller. Okay, that seller will give possession. Buyer paid agreed consideration. Okay, but the conveyance deed is yet to be executed and registration is pending. Conveyance deed means the deed which transfers the ownership from seller to buyer is called as a conveyance deed. That is yet to be executed and transferred, registered, pending. But section 53A of Transfer of Properties Act says that if these four conditions are satisfied, registration is secondary. If these four conditions are satisfied, buyer is treated as the owner only. Sale is completed. Registration is only a formality. In the records of the government, names has to change for that only registration. Registration should not be treated as a prima facie thing. It should be seen as a secondary thing. Prima facie, four conditions. There should be agreement between buyer and seller. That agreement clearly it should be there that seller is going to transfer the possession. Third one, consideration must be paid by buyer to seller. Registration is pending. Even in that case, buyer will be treated as a owner under section 53 of Transfer of Properties Act. Registration is only a formality. Registration do not change the shape of the asset. Next. Therefore, whenever there is any kind of power of attorney transaction, okay, these are called a power of attorney transaction. Any transaction, example, involving allowing the possession, I am allowing, seller is allowing the possession to the buyer of which property? Immovable property. House property is immovable property, to be taken or retained in part performance of contract. I paid you consideration, registration is completed, incomplete from your side. Even in that case, it will be included into the definition of transfer. Next, sixth one, any transaction, whether by way of becoming a member of or acquiring the shares in a cooperative society, company, or AOP by way of agreement, etc., which has the effect of transferring or enabling the enjoyment of any immovable property. Read point number 6. Read the Barak properly. Read the point. Okay. So let's go into the analysis now. So what is this concept? Any transaction which has effect of transferring or enabling the enjoyment of any immovable property. What is this? From the cooperative society, what is all going on? Listen, without a proper explanation and an example, you can't really appreciate the lawmaker intention in this provision. So let us understand that way. See, I have given one example. I have given one what example? See here. First is a provision in the Bear Act. Let us understand through an example. There is a cooperative housing society. Cooperative society, housing society. There is a cooperative housing society. Cooperative housing society will issue shares to its members. Members will pay amount. It will collect money from all the members. From the money collected, it will construct building, housing project it will construct. For the membership they hold, it will give them the apportioned flats. Example, there is a cooperative housing society. It mobilized funds from 1,000 members. Okay, it mobilized money from 1,000 members. For mobilizing the money, for each member, 1 unit is given. 1 unit is given. Because cooperative society mobilized funds from whom? Members. Listen carefully. There is a cooperative housing society or AOP, something is there. It constructed 1, 2, 3, 4, 5, 6, 7, 8 like that, 500, 501, 502, 1,000 flats it constructed. Each block is 1 residential unit. Okay. So how many blocks are there? How many totally? How many? Don't tell 16. I can't draw 1,000. Nah? That's why I have written some random numbers reaching 1,000. 1 to 1,000. How many blocks are there? 1,000 small units they constructed. Cooperative housing society. We call the housing board colonies. The housing board colony. So there is a cooperative housing society. Mobilized funds from 1,000 members. For mobilizing the funds, for each person they gave 1 unit. Okay, 1 unit of house in the 1,000. Okay, each green box is 1 residential unit. So what? Everything is normal? No. Actually, this particular project, complete 1,000 properties are registered in the name of cooperative housing society only. In the name of cooperative society, it will be registered. What will be registered? Houses will be registered in the name of cooperative society. Okay, not in the name of members. Now, cooperative housing society will allot each unit to a person or not? Yes, that allotment done by cooperative society to the member of cooperative society is regarded as a transfer, because who is the owner? Cooperative society. What it is doing? It is allowing some other person or member of a cooperative society to enjoy that immovable property. So see here, there is a cooperative society, housing society. That cooperative housing society constructed 1,000 units of houses. For all the 1,000 units, cooperative society is the legal owner. Which owner? Legal owner. Okay. Each block in green color will be treated as 1 residential unit. 1,000 members are there. From 1,000 members, mobilized fund. For mobilizing the funds, each member is allotted with 1 unit each. Okay. By virtue of membership, because you are having membership, we are giving you that property, 1 small plot. Okay. Now what will happen? Because of this membership, I will be getting a right. Who will be getting a right? Member of a cooperative society will get a right. Up to here, there is no transfer. It is only just an allocation of units of that particular project to the member. There is no capital gains in this case. There is no transfer in this case. But when transfer will come, listen, how many members are there? 1,000 members are there. Where? In a cooperative society. How many members are there? 1,000. Each person gave what? Money. For giving money to the cooperative society has allocated what? 1 unit of house property to me. 503 unit is mine. Let us understand that way. 503 unit belongs to me. Okay. Now listen. Now 503 plot belongs to me, or flat belongs to me. How it belongs to you? Because you are also one of the member of a cooperative society. Yeah? Yes. Cooperative society took money also from you. Yes. Therefore, you are also having a right to get 1 unit of the house property among 1000. Okay. Now what I will do, Koushik Mukhesh being a member of cooperative society will think like this. Already I am having 2-3 house properties in different locations. One I have in Chennai, one I have in Hyderabad, one I have in Vijayawada. Therefore, already I am having my own houses in all the 3 places. Therefore, what I thought, why I need another property? Let me transfer my membership. Let me transfer my membership in the cooperative society to some other person. Now I will transfer my membership to some other person. Now listen carefully. Here you are thinking you are transferring membership, but technically you are transferring a immovable property also. Therefore, whenever any membership of cooperative society is transferred by one person to another person on which immovable property enjoyment is involved, that will be regarded as a transfer. Okay. So by virtue of a membership, transferred membership to another person, to some outsider, to enjoy the immovable property and taken some consideration, that will be regarded as a transfer under the definition. Now we completed discussion of entire transfer definition. Okay. So immovable property shall have same meaning as defined under 269. When we come there, we will discuss. Okay. This part you leave it now. We will discuss separately. Explanation number 2. Okay. Or normally, if you wanted to read, you can read once. For the removal of doubts, it is hereby clarified that transfer includes and shall be deemed to have always included disposing of, throwing up, parting with, going out of it, means relinquishment with an asset, or interest thereon, or creating an interest in any asset whatsoever, directly or indirectly, absolutely voluntary or involuntary by way of an agreement, whether entered into in India or outside India or otherwise, notwithstanding that such transfer of rights has been characterized as being effected or dependent upon flowing from transfer of a share or shares of a company registered or incorporated outside India. Sir, one word also I did not understand. We will discuss about this separately. That's why I told. Just for the sake, you can read and leave now. Okay. Now we completed transfer definition. Okay. What definition? Transfer definition is completed now. Listen. Next discussion will be when the transfer becomes effective. When transfer become effective. That's a different ball game and a different story altogether. As I said, transfer concept I wanted to discuss in small bits and pieces of 1.5 hour concept. One definition has taken 1 hour time to analyze. Okay. Next part of the lecture, we will be discussing about when the transfer is treated to be effective and computation of capital gain. Next analysis on that. Next transactions not regarded as transfer. All those we are going to discuss in the next part of the video. Immediately after this, I will upload another video. In that you will be receiving that particular concept. Okay. Hopefully you understood this particular concept of transfer definition. Next part of the video, we are going to see about transfer when it will be effective. With super case laws we are going to read. There is a case law, Alapadu Venkatramaya versus CIT. Okay. That case law we are going to analyze and try to understand when only transfer will be treated effective. Okay.